Welcome to The Intentional Investor with Matt Zeigler, where he and his guests explore the intersection of investing and life, portfolio, and purpose. Nothing in this podcast is investment advice. Nothing in this podcast is advising you to buy or sell any security or to do anything with your money. Seriously, you should only act on investment advice from someone you know and who knows your unique situation. We are not that person. Matt Zeigler is a managing director at Sunpoint Investments, and the opinions expressed on this show do not necessarily reflect the opinions of Sunpoint Investments or of Second Foundation Partners. Securities discussed in the podcast may be holdings of Sunpoint Investments.
You're watching The Intentional Investor. This is the Epsilon Theory YouTube channel. This is going to be great. I'm your host, Matt Zeigler. I have a great show for you today. Now, the guest here, it's not Ryan Krueger, but they spell the same last name. It's actually spelled the same way. And after misspelling your name a bunch of times, it's an important detail for me. But I feel like you've both been manifested in some type of crazy dream. And that once you're brought into the real world, is this idea scary or is it just very, very, very real? And in your case, the way you intuitively put these ideas and express them, it's like a dream coming true in the tangible sense, not in the nightmare sense. And that's a weird opening. So let's go again. This guest is not Mr. McFeely, as in the Mr. Rogers mailman. Is he the mailman? Well, he kind of is. There's a mailbox link here. There's a neighborly vibe here. There's a lot of like Mr. Rogers friend things I get from you. And that's not quite it yet. And you know what? He's definitely not Rihanna. He's an RIA. He's Ryan the RIA. And maybe it's a little bit more put your money to work, little bit less, bitch better have my mailbox money. But suffice it to say, ladies and gentlemen, boys and girls, the stars at night are big and bright. Give me a round of applause. Ryan Krueger, welcome to The Intentional Investor.
I am delighted to be here, my man. It's going to be fun.
We are going to have a good old time. And I got to start you with this question because I'm fascinated by this. I don't know if this is where you're physically seated, but I heard you decided to open your first office in a dive bar across from an elementary school. And I love dive bars, and elementary school was fine to me, but is your office really a former dive bar across the street from an elementary school? And why was that your best idea?
It didn't start out to be my best idea, and I did think we would be treated more as conquering heroes for the neighborhood and property values, which did all work out. But there was occasionally an old patron that would still stumble by looking for a fill-up and pretty upset that there was a money management operation. And I don't know anything about real estate and laws and all that stuff that I learned, and how that would be able to be across the street from a public school elementary in Houston, Texas. But then other neighbors came in and there was awesome history. It goes back to like the 50s. It used to be a gas station, which was a big problem on the environmental soil studies that I didn't know anything about either. It was like a hangout, and a hamburger spot and then a bar. And now we knocked it down and built this beautiful building. And my goal was to be, one of my few dreams was to be 5 minutes from home, 5 minutes from my kids' school, so that I could work and play as hard, as long as possible every day. And we are lucky and richly blessed to be here.
Was it a deal? Like, was buying the building that the dive bar was in, was it just a deal at the time because this was brand new for the business? Was the value investor hat on in this thing, or was it just, I need a physical space?
It probably should have been. Actually, take a step back. I mean, so when we escaped Wall Street, I didn't have the money or the wherewithal or the foresight to do any of this. We had rented small office space. But my dream long-term was to own our own building one day. And a few short years later, we were able to do that, because I figured, I knew I was going to do this for the next several decades, but what better way to show and sink roots deep into a community than to own the dirt and build something and provide jobs, a place to be. So yes, it ended up being kind of a good deal and probably end up being a great investment, but I don't think of it that way, or any real estate, because I don't ever want to leave. I don't want to sell it. It ended up being a great spot in Houston where there aren't a lot of deals left anymore.
Well, let's take this all the way back. I love starting there. I loved finding this detail about the dive bar. Take me all the way back. Little Ryan, you're from Houston originally? Are you originally that area?
Yep. Houston all my life.
And Where's first job? I heard somewhere you've been started working every summer once you were like 12 years old or something like that. Is that apocryphal? Is this true?
Oh no. And I count it as a blessing. And I think it's probably the missing ingredient for a lot of kids, cursed with a little comfort, that we have good supper table talks at ours about. But I begged my parents for the first job.
How old were you?
I would ride my bike, and it's funny, my kids wouldn't believe this now because Westheimer is a big dangerous street in Houston now. And I would ride my bike to Westheimer, and I was a huge nerd and numbers, and I like numbers and I like sports. And so I wanted to work at a baseball card shop. That was my first job at that age. And it's still one of my best resume tricks to this day. I begged for a job that didn't exist, which is a good door opener. And yeah, he let me sit in the back in a windowless shrine to baseball and numbers and sort thousands of cards every day all summer. But there was air conditioner in Houston, so it was a pretty sweet deal that I parlayed into a little mini trading desk by the end of that first year for my first arbitrage opportunity and turning love of numbers into a couple of dollars. Where I look back fondly and I'm grateful to Ted Stokes. Ted's baseball room. It's not there anymore. And a lot of card shops have closed up, but I still think it's fun, and we'll crack open packs with the little league teams that I coach, and kids still go nuts. Even the ones that have never seen those nerdy baseball cards, they still go nuts, and they should. It's fun.
What were you like the trading operation? Do you mean with friends in the neighborhood, or are you actually like going to like card shows or something like this?
Well, a normal kid would have done that. And
you're not a normal kid.
Ride
we
around
know this.
with the cards and the spokes of the bike and all that stuff. I not only loved the game and sports, but I don't know why, because nobody in my family had any sort of this background. I don't know why I saw some sort of opportunity when back in those days there was no internet, and I would see and watch and just observe and was curious. One of the few talents I was lucky to get, and I was curious, how did this work? You could buy cards in another city, and this guy would bring them in, and then he'd sell them in the front of the store. And I was in the back, but I listened, I learned. I was like, wait a minute, there's like a hometown bias here. If I could buy a card in Cleveland, Ohio for a nickel and sell it for 35 cents to somebody who knows that player and a hometown favorite in the front of the store, that's a pretty big profit margin. And if I could do that 100 times, and I made my first order with very, very few dollars, literally. And I thought that was fun. I thought that was as fun as collecting. And so you learned a little bit of natural biases. And to this day, fast forwarding 35, 40 years, it's the exact same thing I see play out in the investment and stock market. A lot of people that think they know what they know, and they just ain't so. And you could take advantage if you just stick with the data. So I thought there's a hometown bias. And then I was so fond of the backs of the cards instead of the players and the uniforms and the routing. I was like, what is the pattern here of these statistics? And could you ever notice a trend of who might be building momentum or breakout, or who might be undervalued? And I was fascinated with that. So there was a little bit of prediction even back then using quantitative data, and I would build my own little score sheet. And then at 13, I took those first couple of dollars from that ARB desk, and I got the owner to enter me in this contest for adults. It was called Rotisserie Baseball back then, from a famous French restaurant in New York, La Rotisserie. Now it's called Fantasy Baseball. And now, of course, it's gone crazy and daily. But back then, it was done by mail and phone. And this 13-year-old kid who thought he knew more about some of those baseball statistics and how to build a roster than all these adults, I entered the contest with every cent I had and won the whole thing as a national contest. And
you are the rotisserie baseball champ.
And I can only imagine what I've never told anybody this story that cared, but except for my baseball nerd buddies, but I can only imagine now what parents must have thought if like an adult weirdo from Cleveland or New York was calling a 13-year-old boy on the only phone in the house, hey, I got a trade idea. And they just handed me the phone. And I was like, what? There wasn't a drug deal. There wasn't trafficking. Like we're just doing a baseball trade on its history base. What is that, Ryan? All right, go back in your room. So yeah, that was that first profit. And then with that money, and the story ends right here, that money, I don't know, maybe it was something humongous for a kid,
Sure.
like $500. I made my first ever stock investment.
I have to ask this too, like is this the Bill James era? Is like the early innings of, no pun intended, sabermetrics and that stuff, like in your mind for your study of stats, or is this you intuiting all this on your own?
I didn't know who to read or what, and nobody, I didn't have,
Well, there's no internet. So
I was a little bit self-taught. I learned in hindsight, there was a lot of that, and a lot of that money-ballish, value and constructing a roster based on mispriced and overvalued, under-scouted. And so all that stuff in hindsight, I'm reading like, oh my gosh, this is what fascinated me for some weird reason. And now Bill James famously, even I think a couple of days ago, I saw he said it's gone too far. And now, so what will be the next frontier now that all this analytics is available around the clock, nonstop, and people arguably have too much information that they may misuse or overprice? What is the next frontier, which will be fascinating? And I have crazy thoughts on that. But we'll save that for my son who wants to be a coach and work in the sports world. But I think the softer sciences and motivation and stuff that you can't quantify now might be the next frontier in sports. And I'm sure it'll be another parallel in the stock market, and I'll find them every day.
I just want to point out the amazing part about recording these interviews is that so far Ben Hunt created calculus, and now Ryan Krueger invented sabermetrics. And this is amazing how ideas in like the background and like the zeitgeist, all it takes is curiosity and being removed, and how these things emerge. It's so cool. What stock did you buy? Like, what do you do with your giant winnings? You didn't buy a bunch of Wrigley gum or more decks of cards. What stock did you buy?
Compact computer.
I don't know. And what year are we here?
Oh, this would have been 1987-ish. And just a weird, voracious reader. And I don't remember exactly what piqued my interest. I just do remember fondly that very first purchase. And it was off to the races from there with just tens of dozens and 20s of dollars.
How does mom or dad talk to you about like what a stock is? How do you know this even exists? Where is this coming?
It's a good question, because as I rewind the tape and try to teach or share an open playbook with my kids and the kids of the partners we serve, I do have to give my dad at least a little credit for, he would have stacks of stuff that he was reading. He was not a stock market guy. He was a dirt poor farmer from the middle of Texas that had to work his tail off and ended up having enough success working and getting up really early to, I guess, have a few dollars to invest. And he didn't teach me, he didn't tell me, he didn't show me, it was there. He would talk about it. And again, those supper table talks, whatever that background noise, I must have just picked up on it. And the idea of owning a business or a couple, employing people around the world, working around the clock for you and owning a small fraction of that business was endlessly fascinating to me. And so I just kept diving, and I was the kid who would read the newspaper, and I was a kid in college. I was on a payphone mashing the buttons to spell out the ticker symbol to do a trade of some guy, $100, and not going to every class probably, because I was just fascinated with that. I was in the library reading and learning and self-teaching, I guess. And I'm sure there was so many things that I did wrong.
Well, that's part of the education, is you got to make some good mistakes. Who are you going to? Your dad's broker? How do you buy the first shares of Compact? What was the actual physical process? Getting those shares.
So I think he had a regular stockbroker that he did open the door to a kid when he was 16 who could actually get in a beat up old used car. And I'll never forget the very first, so I was still a nerd with the baseball card. So I had now those couple hundred. I will never forget this plastic briefcase. Again, today they might have thought it was some sort of drug deal. And I drove and I made like $1,000 on one of these. Now it was hundreds of blocks of cards. And I drove that beat up old Bronco 2 to ask for a summer job with this broker that was kind enough to place $100 trade for some kid. And I sat on that desk as they were cold calling Dr. Pepper bonds, and my endless fascination started to multiply. Even though in hindsight, when people ask me about these crazy movies about boiler rooms, I was like, wait a minute. I was in a few of those. I thought it was a summer job. I thought it was like learning how the stock market worked. And then when I was back in school and I went to UT, I was like, it probably was a good clue that the interview was at a bar or an apartment above a bar on 6th Street in Austin, Texas. May not have been a reputable brokerage firm, but in fact, closer to one of those boiler rooms. And those movies are real, in case you didn't listening to this. So I got to see it all, the belly of the beast. I was too ignorant to realize that probably some shady stuff was happening in some of those rooms. But I look back so fondly. I mean, the index cards, those Pago cards, those cold calls that I was hearing all around me. I got to see that side of it before I was lucky enough to enter the pearly gates of the real stuff a few short years later. So I look back so fondly at getting to see all of it.
So you're 16, it's baseball card money, this internship for this guy, also above a bar. I don't know, it might have incepted more ideas, so we're saying here. But like, that's the real education. So that was the first time you actually saw it as a business too. Because like, dad as a farmer might have the newspaper laying around, but dad is not like, here's how a brokerage is run. Here's how these things actually trade, and people, this is some guy's job. How did that imprint on you?
And it was fascinating. And maybe I give credit because my dad didn't tell me what to think. He let me observe it. I don't know if that was intentional or not, but in reality, then I start piecing. I was like, wait a minute, maybe guys like my dad are getting ripped off. What's happening here? And so there was probably an early seed of, holy cow, surely this can be done better. Honestly, clean, like the beautiful numbers on the back of those cards, no matter what was happening on the front or all around it, that the beauty of data is it doesn't care about anybody's opinion or politics. And so I guess that, weaving that thread through all those experiences was really formative in hindsight. Now that you make me think about it, and your podcast does this, brother, man, you're bringing up some real stuff that I've never even talked about before. Let's go.
Well, take me here. So how does this turn into, do you go to school for finance? Does this plant the seed that I can't go to school for baseball cards? It might as well be a stockbroker. Like what's the next step?
Yeah. And this is one piece of advice I've given to kids and graduates that I would not take from me, which is, there's a great book, because you and I like to talk about books, called Range. And it made a huge impact on me as a dad. Like, I think it's very intimidating for kids to be told to follow their passion, or you better figure out what you love. And now you got to figure out your major before high school starts. And this is very intimidating to kids. That book beautifully discussed, try as many likes as you possibly can before you ever worry about what you might love. So the advice I wouldn't take is, I don't know how in the world I knew what I loved, but yes, all the way through school and those silly payphones. I mean, I would have been in class trying to develop a diversified curriculum unless I somehow figured out I wanted to be involved in the stock market. So there was never a question in my mind, although there humbly should have been, because when you get close to graduating UT, and I was so ready to get out of there, I didn't even go to graduation. I didn't know several thousand of these people anyways. My daughter, who just graduated, couldn't believe that as we sat in the stadium. And her brother asked, when can we leave? Dad didn't even go to his graduation. I was just ready to go. I didn't take a week off. I was ready to go to work and figure this out for real. And the only problem was the best firm that I thought at the time that I would have given anything to start at was not interviewing young kids. So they politely declined my request for an interview.
Well, who was it? Who was the firm that you were?
Smith Barney.
Okay.
And this was the exact opposite of all of those backroom boiler rooms. And I didn't have, no connections, no family, no friends, nothing to fall back on. We didn't belong to any country clubs. There was nothing. So I just stupidly walked in the front door and wanted to figure out how the interview process worked. And, I had put every dollar I had liquid at that moment to the suit from Sears Roebuck, that I don't know how I wouldn't have sweat through now in hindsight with that thick wool in Houston, Texas. And so that's the other fun barroom trivia on me. Because I was declined that interview, I never produced a resume. I never had a resume. I never wanted another job. So to this day, as a ageless beauty at 51, I've still never once had a resume in my life. When I was declined the request, I wrote what I will still consider and call, and I've got an archive of all these beauties in my museum here. I call it the Hail Mary letter. I just wrote a letter begging, not for a job, not for an interview, because they had already said no. I said, can I just come talk to you and visit? And I figured once I somehow got in that door, I would politely refuse to leave. And so they said, here, start in the mailroom.
When they decline you, the tenacity to write the Hail Mary letter, did any of this come from, was there any advice on this? Was this just I have to do this? Like, was anybody else involved in the decision to write that non-resume resume?
That's a great question. No, but I am quick to give any bit of credit to anybody involved in my operating system or roots. And my grandparents, even before what I learned and listened to at my supper table that I was lucky to, probably a huge part of it. I mean, they were my business heroes in San Antonio, Texas, that started with $55 that were refused every possible break. And he wanted to start a little lunch counter that turned into a restaurant, and he couldn't get a loan. His version of no interview, I guess. He couldn't get a loan from any bank because he was blind. And they built a business with $55. And the other grandfather had probably less, trying to raise cotton in the middle of Texas with no irrigation when it gets pretty warm. So I think finally, I'm sure some of that was infused in me, because spending summers with characters like that and just watching them, working for them, with them, it never dawned on me to stop. And I was no hero like them and their background, but I guess I just had and I still to this day will try to pay that forward. And I will yell to my kids on the way to school every single morning, we will attack this day with a relentless enthusiasm unknown to mankind. And I am so lucky for some weird reason to have that fire burning in me. And I try to share it and light as many others as possible, because I consider myself very lucky.
The dinner table conversations with the parents, you're sent to hang out with them over the summer. The whole family goes to visit them over the summer. How do you get to hear the story of we got declined for the bank and I was blind and wanted to have a restaurant? How's that story get told? Is it mom and dad telling the story? Is it straight from grandpa's mouth?
No. And that's we could all probably, including me, take a lesson from this. It was never told to me. So I wanted to work for them in the summer. So my parents would ship me to San Antonio. We'd drive around in a little white van, and there was no distribution center for their cafeteria at the time. We'd go to Sam's Club and we'd load up those Dr. Peppers. This is before we were cold calling to sell their high yield bonds. And we'd stack them. And watching this little lady lift these crates because her husband was unable to do some of these things, completely blind. I just saw hard work. And at that time, no, they didn't tell me the background. I had no idea. My parents had never told me that. I actually thought they were rich. I holy cow, they have this.
They own a business.
They own their own business.
They were in private equity.
It was in the middle of it was at a Southwestern Bell office building. So they had guaranteed lunch counter business. And they were the richest people I knew at that time. And I was in awe. And I guess, owning your own business and working for yourself, but seeing how hard they work, not sitting behind any desk or telling people what to do. it was only decades later that that curious kid turned into an adult with his own kids that wondered and looked back and like asked those questions. I didn't know that backstory. I mean, she is humbly handing me newspaper clippings of when he escaped the blind school where they were mistreated in Texas, literally jumped the wall, led a band of blind kids in the middle of the night with nobody there, no parent. They didn't want him. They gave him away. They wanted nothing to do with him. What do you do then? Like, they don't have $1 in their pocket. They're completely blind. They're on the other side. And I still find, so thankfully, these treasures that she gave me, a newspaper account of blind kids escape. Years later, there's a picture of them somehow or another, maybe through Goodwill, which he later was executive for. He got suits and they played in a band. They'd self-taught. The Distinguished Gentleman was the name of their band. And they probably scraped together that $55 to start that lunch counter with nothing. I didn't know any of that, to answer your question. But when I read it, and as tears were bouncing off, goosebumps, holding her, and I'm going to her. I hope I don't get choked up, but if any podcast would do it, this would be it. I'm going to her 95th birthday next week. Still kicking.
Did she have those articles like saved? Were they in a shoebox somewhere? Or
yeah.
Where'd you pull those out of? Yeah, I know. Yeah.
All right. I knew you'd do it. But and her son, my mother's brother, would also tell me these stories that I didn't know. I mean, he built the basketball goal that he shot as a kid. Think about doing that blind, man. I need a crew to do that.
Right.
So I learned all that, and I would literally sit at his feet in his recliner, and he had this tape recorder that I still have, as he would call, and I just listened. I was fascinated with business. And he did it all himself. And my lucky charm that I made into a necklace for her was this contraption of this wire that he built to hang around his ear so that he could give himself his own haircut and shave his own sideburn, because he didn't want anybody to feel sorry for him. And he would actually never ever know he was blind. He trained himself to figure out, with her help, to look people close to straight in the eye, and you would never know. And he never wanted any pity. He just wanted to work.
You take all these lessons, you go to school, you come out, you tell Smith Barney, I'm just going to hang out here without a resume.
I'd hope to hang out there. I'd like to hang out.
Who interviews you? Who says, who's the person who gives you permission to hang out? And then how does the first job happen?
And for all those taking the under on 30 minutes for first tier, and I'm super soft. My team here, if there's a week that goes by that I don't cry in a meeting with our partners who light me on fire, it's a bad week. So winner to anybody who had under 30 minutes when Zeigler was going to make that tear bounce on the goosebump. I knew it would happen. That was an easy bet. My friend now, but at that time, big boss and intimidating with the suspenders and the Wall Street look and the cufflinks, Doug Forshagen, took a chance on that kid. I'm grateful.
What did he tell you when he said, how was this introduced to you?
Oh, well, that's a way to turn a tear into a laugh really quick, because my instructions, I'm like, holy cow. After the mailroom and doing anything they ask, I was like, given this thick book, I was like, all right, you got your shot. You're going to training on Wall Street. I was like, oh my God, this is it. And I'm
going to training on Wall Street, like get on a plane, like you're going to New York.
Yeah,
Wall Street.
And I only had one suit at that time. So it's like, there was a couple of instructions, like where you check in and you're going to need a trench coat. I was like, trench coat? Holy cow. All right. And I got this big training material, and my only instructions that I will never forget, that I'm almost certain I've never told anybody, but you asked the question, I give direct answers. He said, it was a training class of maybe 100. And he said, and I was thinking he's going to pat me on the back. This is it, man. You're going to do great. His only instruction out of understandable self-interest in hindsight, because he was not supposed to hire a kid with no background and no network. He said, if you see such and such, that's a name I won't mention, you are to do whatever you can, including jump behind a couch, to avoid meeting him and shaking his hand, because I do not want him to know that I hired. So welcome to Wall Street, brother.
Bring your camouflage. Avoid this man at all costs, but learn everything that you can. Tell me about what's New York City is. I mean, it's not just different from Houston. New York City is different from rural Texas by light years.
Oh yeah, and I'd never been.
What's that like?
And it was split. And I don't the details. It was a blur. There was training in New York and in Hartford, Connecticut at that time, and it was cold for a Texas kid, and it was just an absolute blur from that point on. And that model, and out of those 100, maybe a couple of years, 10 people were left. There was one beautiful seed from that messy blur that I give them so much credit for, that very difficult to replicate now, if not impossible. When I talk to people on that side of the fence before I escaped, was there was an unusual amount of discretion on which path you might want to go down. And I didn't have a network. I didn't want a cold call. I certainly wasn't a good salesman in the back of that baseball card shop. I did like numbers though. And I was introverted and I loved figuring stuff out. So for absolutely no good reason at all, I wanted to go straight down the portfolio management path and just use my love of numbers and puzzles, and thankfully got that chance, and started with nothing and asked people for their trust and earned it. And there were advisors. And I didn't know back then that these big giant wealth management shops, that the reality was that none of them managed the money in-house, that they all outsourced it, which made perfect sense. Nothing against that model. I wanted to be the one, not just to get the credit, but to take the blame or know where something was wrong so I could go fix it and figure that puzzle out. So, by the end of that 10 years, I had realized and earned the trust of not just investors, but even advisors would trust me with discretionary accounts at a very early age, because it was the one thing I was any good at, thankfully. And I've never stopped doing that. And that's why I didn't have a resume. That's all I've ever wanted to do, to this day.
What's the job when you come back? If you do the training, you're now back in Texas. We've all been through training programs. Anybody watching this is probably somewhere adjacent to this industry and knows, like, you learn something, but then you have to do something. Where do you land in either the Smith Barney ecosystem? Do you stay in New York? Do you come back to Texas? What happens after training?
Okay. Came back and started in Houston. And it was, their bet was pretty simple. Pretty good asymmetric setup. Build a little book of business or you're gone.
Okay. Like, find some clients, invest the money, have them pay you for investing the money, or get out.
Yep. And big bullpen, and you're fighting over even a phone. There was one Bloomberg for 60 advisors, and maybe they call themselves wealth managers now. They're all still they just changed the name on the cards every couple of years, but they still started as that stockbroker above the bar.
Yeah.
He was doing the same thing as some of those guys, but it also got a lot more sophisticated, and there were some exceptionally bright people in that office. And there was a lot of lazy people that were great at sales and not so great, and they loved the lifestyle and loved leaving at 3, and God bless them all. I would sit and listen to the handful of people that somehow or another I figured out were exceptionally bright and at different things, and I was so curious, and I just asked questions. And I would listen and I would learn. And even just, I guess in hindsight, that humility, which was authentic for me, one of those handful of exceptionally bright people, as one of many examples of lucky breaks, and I had none to start with, was like, you seem to really be obsessed with this stock market. And I see you here well after 3, and I came in on Saturdays, and I like to. And that's one piece of advice that I also wouldn't take when I have young interns that say, what's the secret? I was like, well, I can drive you by the apartment I lived in. It's still here. There's now people talking about inflation and they can't afford and they need a minimum starting. It's like, actually, it was $500 all bill paid, and it sucked, and it was dangerous, it was awful, and it made me want to go to work even more. Like that unfair advantage of discomfort, pretty good ingredient to most. I don't know a successful story that didn't start with some discomfort. So I liked learning and working. But one of those guys said, all right, I've got somebody who I only know technology, and you seem to be interested in this simple, diversified. And back then I ran a roster of 50 stocks in this portfolio, and it was diversified. And I had a rules-based at the time. There was I didn't know what the word, rules-based evidence, none of that stuff, well before.
You're just a baseball card kid. Who would know these words?
It was the same thing. Build a roster of different players that you're underpricing. And so it was that. And he said, why don't you go help me with this particular client of the firm? And I was like, this is how, to answer your question, I built this little book.
Yeah, no, I'm getting it out.
I'm in Woodside, California. At the time, I did not realize was literally the edge of the pin against the bubble in the late 90s. That particular day was the largest real estate transaction in history right up the hill in Woodside. I'd never been to Woodside. I didn't know anything about it. I never heard of this place called Buck's Pancakes that I'm supposed to meet this guy in. Years later, I read about all these unbelievable startups began at that restaurant. And he said, well, I hear you have interests other than technology. Why don't you start and help me diversify? And those little opportunities to help people with a balanced portfolio. And in some cases, there's just a lot of luck involved. I hadn't earned some of that trust yet. Maybe they observed my willingness, my curiosity, my hard work, but there's a lot of luck involved too. And I never undervalue that. And I got those little seeds, started that little book.
Who gets you to that meeting? Like who says?
The kindness of a stranger in that office, to answer your question, who simply observed me on Saturdays or asking a question. And he was an ace in technology and he didn't know some of the other sectors. And he said, will you help me with this? So again, just showing up, being curious. I didn't come in and tell people what I knew. I asked people what I didn't know. And I learned and I took good notes. And all those people that I learned from, I am to this day friends with and are grateful for. You do need a couple of folks to help you, especially when you start. I did. And some of that is earned trust. I mean, if you're willing to outwork everybody, that tilts the odds of luck and at least increases the surface area of luck. You can engineer a little bit.
You definitely can. You may not be able to create a Buck's Pancakes, but you can certainly go eat there with the right people at the right time and get the benefit of that service area. Waffles or pancakes? What's your preference? Do you have a preference?
Well, one of the memories that is grilled into my brain from that day, and fast forward, this guy founded a company, was later bought out, one of the biggest tech success stories in history. I had no idea. He shows up in overalls like a farmer from Texas. And I'm like, these are people. I didn't know what to wear. What are we still looking at? And no questions, no menu, blueberry pancakes. That's it. And one of the lessons I learned from that guy's humility was, and to this day, all these different questions and models and overly complicated and manufactured confusion, I think Wall Street is very good at. It's a for-profit business. There are really only two questions that every single person having, including that Titan that day before I knew it, is how do I know I'm going to be okay? And how much is enough how much is enough? And he had said to some degree by having that, I've got enough. I need balance. I would actually like to turn on some income streams, not continue to lever into this tech space, even though it went on to become even more wildly successful, taking a few chips off those tables and shoving it into his overalls at Bucks that day was not only a lucky break for me, but hindsight, I didn't know it at the time, a brilliant lesson on sell disciplines because of what soon happened to all the tech stocks around him at every other table that wanted more and more, and humility to ask questions.
So what year are we here? Are we late 90s yet, or are we? Oh, this is all the way in 99.
Yeah, I started Smith Barney in 96. So that was 99 when I got one of those early lucky breaks.
You build this portfolio, and I think there's something important inside of this. You don't just build it for him in a way because of those two questions he bought. You're also building it with him. Am I fair saying that? How do you interpret that? Like building for versus building with?
I think that's beautifully said and not thought about enough. And it was not a business building technique. It was a simple oath back then, which is one of the only simple sacred truths and oaths we keep to this day, which was I was dumb enough to think that if I told somebody all I'm going to do is show you where 100% of my own money is, which at that time didn't add up to a whole lot. And I've told you where every dollar is so far to that point.
I've got these baseball cards. You've got to understand.
Well, and then whatever after tax from that first salary of $23,000 that was left over. I mean, it was just stacking up. I said, I'm going to show you where everything I've got is. And to somebody who might want to take a chance on anybody at any stage with skin in the game, they're tilting their odds of success and luck in their favor too. If I know this is all this guy is obsessing about at the time, right? I like to take my chances with this. So to this day, one walks in, here's where 100% of our money is. And that same exact original portfolio, and we built several of those around it, still exists to this day as I'm sitting in this chair on the screen next to me.
That understanding, because I think that that's a different way, this building for versus building with, like actually building it for yourself and then building it with the other people as they come into this conversation. I feel like that's one of the things that you bring to the firm, that you bring to the thing you've built. And we'll get to the end of Smith Barney, I think, in a few minutes here, but like it feels like it was just really got ingrained with you, the co-investment, like alongside the clients.
Well, they didn't have fancy names like separately managed accounts back then. I didn't know any better.
We didn't even know what a principal agent conflict was yet.
And so the idea of being able to transparently see every single name of every single business, I didn't think there was any other way. Like it would have bored me to tears to own a couple of mutual funds and go play golf or go to a networking event, since I didn't network or play golf, and blame the manager and call myself, I'm the manager of managers. And when something goes wrong, I will do something about your allocation. That would have bored me to tears. And I don't think it's terribly authentic. And it is more of a sales and asset gathering job. I wanted, win or lose, to see every single name. And I also wanted to be able to sit knee to knee with them and say, here's what's going on. Let's talk about this. And we will build very strict sell disciplines where something goes wrong. So it's never should be about my idea and what I think will always go right. Because I had seen, and again, my antenna's way up, and I'm so grateful for all that time. At the time, it was the biggest global bank brokerage in the world, and they ran into all sorts of problems and conflicts of interest and analysts and investment bankers and the whole world that I was removed from, that ultimately resulted in, heavy-handed, no emails, no communication, nothing, because of trouble they had gotten themselves into and conflicts of interest. And I was just so blissfully ignorant of any of those conflicts. I wanted to sit down, talk about, own, see all of the open heart surgery for anybody else that was interested enough to sit alongside me and know what they owned and why, know exactly what was going to happen when there was a mistake. And that simple sell discipline rule that has also never changed is probably the one thing I disagree with most even professional investors about, that never had those. They're going to double down on their own best ideas. And it's human nature that if they spent 13 years doing work on X, Y, or Z, it's very difficult to remove yourself from that work and admit mistakes. So I just had a very simple, thank goodness, objective lens on that. So that transparency of separately managed accounts, I didn't think there was any other way to do it. And I I didn't realize how beautiful and how much of a partnership that would truly be. And that was a big deal to me. I wanted to work as partners. I would sign every single card, your partner. Even back then when nobody should have trusted me with too much, when I didn't have any track record, I liked working together alongside, and I liked working for them. And I thought it was our job to serve them. And because of that trouble, and I know that they got themselves into, that I was thankfully removed from, you couldn't do stuff like that anymore. I was told you cannot sign a card your partner. You cannot even tell them where your own money is invested anymore. That's a potential conflict of interest. And that was my polite deal breaker, that I was willing to leave every single dollar and cent and stock option behind 10 years later in '06. And that was my simple cue. Go do exactly what you're already doing, free of any conflict. And yeah, you can sign off your partner, because that was a big deal to me. And I wanted to tell anybody who ever trusted me, which I owed everything to, that I meant what I said, and I'm going to keep my promise, and I keep them all. That's a sacred oath. I'm going to show you where all of my money is, and we are partners, and you're not clients, and you're not customers.
10 years, 96 to '06. Smith Barney goes through some booms and busts over again with everybody on the ride, like all the major Wall Street players. I share the experience. I know how hard it is to leave a big firm for lots of reasons, not just because it's scary to leave a big firm, but there's oftentimes at least a comma, if not a few commas, on the table. I mean, you must have had a lot of incentives. Come on, sir. You can't sign your name. You can't tell them what you own, but it's not so bad. Look at these equity awards. Look at these other things. They must have been in front of your eyeballs. That had to be. What happened with that?
You're right. And as you well know, and then some, and there's all sorts of reasons to be comfortable in that zoo, and they take your claws and your wings away for good reasons. And there's more than golden handcuffs and reasons to stay, but there's offers to simply walk across the hall and do the same thing for even more commas, which always rubbed me the wrong way. And to this day is, I think, one of the most under-discussed, like, what's in it for the investors in all of those deals where guys are moving back and forth and being paid bonuses? What in the world is in it for the people they're supposed to be serving? Because I got news for you. It ain't a better setup. It often isn't an increase in their net revenue. So I don't know how to answer that question when somebody asks me, how did you do it? Because I had no money to fall back on. I didn't think there was any other way to keep my promise. So we started with nothing, started all over again. And in fairness, I wasn't farther enough along in being able to. There's some people that can't afford. They built a lifestyle that they can't afford to leave and start over again. I get that. And they have responsibilities, and there's nothing wrong with that path. I was willing, and I just didn't have any doubt, stupid or otherwise, that we could do it.
You take what you have. You know the lifestyle is under your own. Lifestyle's under control, which I think is a huge part of this. Lifestyle's under control enough that you leave. Do you come up with a name right away? Is it just you by yourself? Did you leave with a team?
It was just me and my partner from New York, Mike Catalano, and it was real simple. It was our names, Krueger and Catalano was the name of the firm. It was really simple. It was just us. We didn't have a team. We didn't have any reason for anybody to want to come to work for something with nothing. And as we worked hard and earned more trust, I thought that, as a small business owner, back to those roots, the best day in the world is putting your own name on the shingle. And there's a lot to be said for that. There's some good, finance studies of more accountability, although it shouldn't matter. But you want to make sure it works when your name's on the door. And I realized as we grew and as I was really on fire to share this playbook and serve more people, that there's actually even a better day. Took my name off the door, and I thought if I was a young, smart, hardworking person, it would be even better to work with a team. So we renamed it Freedom Day Solutions. And it was in honor of the people that we serve. And every single day when I walk into this little building, our favorite room is this big giant wall where it's every one of our partners and their freedom days, which we think is much better than retirement. And we can get really nerdy on that. It's a whole other section. But I thought I saw what was done wrong at all the asset management firms. And I thought there was a better way, more inspiring, more healthy, and yes, more money for the people that we serve. So their freedom day and staking the name and the building to work and serve them and naming it for them, not us, was the end of that as far as the name change. And I haven't looked back. And I think we have been lucky to attract other smart people that want to work on a team and that don't want to be, a solo practitioner or put their name on the door. And I'm included. I have become smarter by surrounding myself with better people.
When you left Smith Barney and you put your name on that first shingle, are you married yet? Do you have kids, anything like that yet?
Yeah, we could afford that chance. We only had 2 kids. And we did not live a lavish lifestyle, and it was reasonable. I should have been more scared, because when somebody really turned the screws on that question to me not long ago, thinking about an escape, I was like, I probably should have been more scared, because I didn't have a whole lot of reserves to fall back on, but I didn't have any doubt either, thankfully.
Yeah.
And I had the trust of those 3 people that were counting on me. And it was just never a doubt in my mind, and I was going to make it work no matter what.
What was, I imagine, your spouse, your official partner, felt the confidence in transition? Were there some hard conversations about, like, I don't know what's on the other side of this? Or was it the Ryan always makes it work? How'd that go down?
Simple, beautiful trust. And I've learned, I didn't know then, but I've learned, and watching through some of those goosebumps and tears in our room where we meet partners, and I've certainly seen this up close, every part of how plans and which investments and what's going to work, all of that, even at the highest level, all of those who's and what's take a backseat to who you're with. Whether it be in business and life, who you're with is the most important part of any business plan. So I had simple faith and trust and unblinking. And I wanted to make sure that was always, without exception, honored.
I want you to talk about this conference room. Actually, I want you to define what a freedom day is first, just because the name of the firm is routed in deeper meanings. And I want you to share that. And then I want you to tell me about what's in that conference room, what all those pictures are, because I love this story.
So the hardcore nerdy mathlete in me takes issue with some of the traditional retirement plans and with the withdrawal rate, which even simplifies that and is a decent model. The safe withdrawal rate started by a guy in San Antonio, Texas, as small world would have it. One of my last presentations to advisors before I left Smith Barney was walking through the simple math of from 68 to 98. If you averaged 11% in a simple 60-30-10 plan, stocks, bonds, and cash, and no funny business, you averaged 11%. Back then, I saw plans walking out the door telling people, patting them on the back, yeah, you can retire and you can pull 7 or 8% out because the market goes up 11. Those were the best retirement plans back then. And I walked through that math and I showed them what every $1 million, just to use a generic number, would have been worth using that plan, not with a projection, but actually walking through the last real 30 years, which is pretty good if you got 11% compounded average annual rate of return, and ask every hand in the room, the smartest guys and gals on the street at the time, what would they guess that million is worth at the end of 30 years if you're taking out 7 or 8%? And the answer that nobody got close to was 0 after 13 years because of the sequence of returns being more important, as we both know, than the average rate of return. But even to this day, the safe withdrawal rate of 4% which has now been backtracked on and is more confusing, and Google safe withdrawal rate, and you get a more confusing and complex series of what ifs for a poor potential retiree, then it was supposed to eliminate all that confusion before it started. So just the simple math in me said there's got to be a better way. Rather than it be a nest egg or a number, how much is enough? It really needs to be free cash flow. It needs to be income. And the beautiful thing, I thought, was it could be at any age and at any size asset, because the definition in our opinion with some pretty good objective math and evidence with zero predictions or opinion of my own included is when every single need and cushion for wants, when that burn rate is exceeded by free cash flow, which in our opinion is a combination of risk-free income, which some people think is too conservative, some version of insured assets like a Texas school bond, as I look across the street, AAA rated insured interest, tax-free, alongside a rising stream of income, which for over 2 centuries has come in one flavor, rising dividends. All sorts of different ways you can invest, but this is a simple playbook. When that safe and sacred rising income stream exceeds all needs and wants, with a cash contingency bucket left to the side for unexpected, that is your freedom day at any age. And we can absolutely articulate with exact numbers to the penny and to the year when that will be, working alongside and collaborating on the planning side of the firm with folks. That is just a gigantic eyebrow raiser and aha moment that can unlock peace of mind that I've never found exist on any other plan, where it's supposed to be a number that we get to. And rather than me painfully and boringly, for some people, show that numbers in those spreadsheets, that wall that you ask about is every one of those freedom days, which to prove it's not about us and that it is about them. And the reason it's a partnership is there's a lot of different lifestyles that make that math. If you want to move that up, if you don't like work as much as I do, you can do it, but don't expect the market to do it for you. Don't increase your aggressive exposure. And that's where this anxiety comes from in the market. They want the market to do more for them so that they can stop working sooner. And that's where people get upside down real quick, as we both know. And the quote that I accidentally shared with some friends that some people ran and took and love, and Carl Richards did this simple sketch of, I said, the best trick the devil ever played on investors is making them think it's the investment part that matters more. And he did this pie chart that it's, in my opinion, it's the working part that matters more, not just for health and savings, but if you are so busy and if you like what you do, it's going to impact your math significantly more than any of the markets are going to do. So that wall on that freedom day, I call it the Grindex, because for all the thousands of indexes that our industry has created to measure risk and rewards, I always wondered, why isn't there one to measure peace of mind? And with that extra time and peace of mind, if you multiply that by more relationships where you can give more of your real intentions and purpose, which I think we both have in common as our biggest curiosity in your podcast, which I absolutely adore, that builds this memory bank, which will expand exponentially and by definition outlive us all when it's in others' memory banks. So to prove the beauty of this math that I've watched is we actually have 2 of those pictures of all the different, and we have a great blog post that I try to define how much is enough with 2 specific examples. Instead of hearing it from me and what I think, just actual illustrations of these partners' success. And one guy has a burn rate of $700,000 and he's not sailing the world. He's not lighting money on fire or cigars. He's just an aggressive giver, and building very specific giving needs into his plan was a big deal for him. And so his freedom day was going to be different as a result of that. And he's wildly successful, an unbelievable human being. And so who's got it better? That guy, which all the money and gifts in the world, or the other guy on the other end of the spectrum who lives on $7 a day on the front of the Pacific Ocean, who says, all I really need, Ryan, is a couple of cold beers, a couple of my buddies, my surfboard, and his work commute is walking the front door out of his little bitty house into the ocean every single day. And each of them have their own definitions of Freedom Day. And I'm not sure who's got it better. I love them both. And to prove that it's not the investments and it's not us, that Freedom Day is something bigger. And yes, it's a calculation, but more importantly, it's the peace of mind and how wildly different it can be applied. Those two guys happen to actually be brothers. So there's a lot of different ways to do this, and they are perfect, beautiful examples of it.
I know, or I feel like I know, your kids must come into this office once in a while. They see these pictures on the wall. They see that. They might not read the blog post. They might. Maybe 1 out of 5. What are they? I'm going back to your grandparents. I don't think you're beating this stuff over their heads, but like that $700 to $7 a day differential that's the kind of stuff. A picture is worth more than 1,000 words, especially that many pictures. What do your kids say how aware of any of this are they?
Oh, I hope and pray it's the simple infusion of an operating system, that it's what they're caught, that, they say it's not what is taught, it's what is caught. Because I don't have a heavy hand, probably to a fault. I'm probably, if anything, way too soft on any of that. I don't tell them what to do. I don't make them do anything, because that was the operating system I had. And for better or worse, that's all I know. And I've learned and collected pages and notes from everybody else around me. And I've just simply tried to share them when they're interested. And when you get one from graduating college all the way still to 5th grade, you get different levels of interest. Now all of a sudden those conversations are pretty real, entering the real world. And I pivot recently that if I was going to try to teach any of this finance that I would have objected to when my son said, I don't know if I'm interested in finance, Dad. I think I want to go coach basketball for nothing. I stopped, I paused, I thought. I was like, well, awesome. I was willing to do something that I liked for nothing to see if it worked. And if it doesn't work, you're going to know even better what you like or don't like. So go do that. I didn't try to talk him into finance. I want to try as many likes with them, alongside them, and then let them do it on their own before they ever worry about what they might love. But yeah, I sure hope. And their pictures are the biggest on those walls. They are who I'm here for. But then to have this bigger family that I get to serve and listen and watch some of these 2 and 3 generations of partners now, it truly lights me on fire to watch those paths. I am genuinely more excited about the next 30 years than the last 30, working for and loving playing with him.
You think you'll go, the powers that be willing? Do you just keep doing this until you're not doing it anymore?
Oh, my stated goal on that is to never retire, because I don't want, as long as I'm loving it and I'm helpful to people, I would. Now it's already shifted in terms of goals and financial and motivation. Like I told somebody yesterday that damn near brought me to tears again after giving her a gigantic raise. I get more excited about impacting others' lives and the team that we get to now support, not just the partners we work for, but let's build this team big enough so that I can impact other people's lives and help them. That is why would I ever want to stop doing that as long as I'm lucky? So some of my favorite little pop-ins, and, moving from that big giant office building to, this old dive bar where somebody can walk in right off the street in the door with no parking problems. You get people walk right in, and my favorite visits are, hey, I just want to check on you. I want to see the whites of your eyes. I want to see if you're in good shape. I want to see I want to see if you're here. And they always get the same, like, wow. And I do feel better. And I think I am healthier than I was several years ago. I'm going to try my first little mini triathlon in a couple of weeks, which my kids laugh at. And so I'm try to teach and share that playbook too, because it's not just about work. It's about playing just as hard too. I remember Kirby Puckett, 1984 World Series, his t-shirt. I just never forgot. It said, work hard, play hard. I was like, that's pretty dang good play.
From Kirby Puckett's mouth to God's ears. When you think about this, like as legacy, so beyond you, I'm going to say you work 100 years old, you silently drift off into a nap at your desk, you're gone. The legacy of this thing, what do you want to live on? What do you want to live on about this ethos and what you're leaving, both with your kids and with your clients and your partners and everything else?
So since we're both book nerds, have you read Blue Zones?
I have not read Blue Zone.
Okay, so
Tell me about Blue Zone.
I will send it to you. And it was a study, National Geographic scientist, data guy. It's a common theme here. Hardcore data that unlocks unbelievable stories. That's why I love nonfiction. So he studied around the world where people were living disproportionately to 100. Because you're right. That is my goal.
Okay, I've heard of this. I've not read this, but I've heard of this.
And it's fascinating, right? Sadly, there's only one of those spots in the United States because we do have some unhealthy, toxic environments. But and it was
Detroit, right?
Unbelievable lesson, and it's not always what you think, and it's subtle things. It's not don't drink or don't eat bread. It's eat this kind, drink that kind in moderation. It's not work out or do ultra marathons or lift weights every day. It's subtle movements. Go garden, go hike. And stay active, stay working. There's got to be a bigger purpose, which I think is the beauty of your podcast. There's got to be something bigger. And when you find that bigger purpose, there is no stopping. So I want that to be the legacy. I want the memory banks to be growing. And I would love this firm to far outlast me and to have a team or folks, and we're building it, adding even more really, really sharp pieces when I probably should be throttling back and turning this into a lifestyle practice. I don't want to do any of those things. If I want to share, solve more puzzles and light more people on fire, because I see too much confusion. I see too much anxiety out there. And I want to be a little more purposeful about giving and sharing and impacting those lives. And it can be done in big and small ways. I can't wait to find out what's next. That's what I love about this job. I cannot wait to find out what's next.
I love the seek for what's next, the seeking for what's next. I love just I love the growth in that. I really just love the goal being growth, not the goal being like, let's put a constraint around that thing. No, take me out of the equation. Take the market out of the equation. I just want this thing to keep going. I love the momentum. I have, man, I got a lot of notes for you here. I got to remind you about some of the stuff you said here today. I got to remind me about some of the stuff that you said. Now, I joked in the beginning about this like Freddy Krueger, you and Dreams thing and this connection.
Hey, I got a silver lab named Freddy Krueger, by the way.
Do you seriously?
Oh, yeah.
A silver lab named Freddy Krueger. And like,
my kids named it.
You don't strike me as a horror movie guy. Is there
I'm not. I am not.
Because I can't imagine. So I joked about this, but then you talked about this idea of you having this dream of like, because I'm asking you about the bar and you said you wanted a place that was 5 minutes from home, 5 minutes from your kid's school, and without invoking any death or stoicism in it, you said you want to own the dirt. Man, does that seem like that comes back over and over with you, that you want to own the dirt under the thing. It's like the ultimate ashes to ashes, dust to dust thing, that you want that evoked in the spirit of everything that you do, that full cycle.
Well, I know it to be true and simple, and those are my simple goals and needs. That's my version of wealth, to be able to not be in traffic for 45 minutes and get home as fast as I like to get to work. But I hope that there was a bigger purpose, because I see too much wrong in this industry of people moving. And I did want them to know that we're going to sink our roots and share with the community, because this is more about the building and what we do here. It's more about sharing to the neighborhood and impacting lives. But I did, like, what better tiebreaker in this world of confusion where everything's digital and every, cloud this and cloud, like, what if I get to sit knee to knee with somebody who owns that building, who's going to stake, I have nowhere to go. I want to be here for as long as possible. Because I think with all of the unbelievable exponential, great new technology and solutions, and our industry's caught up in all of it, and AI, and I've said, to me, the best AI is an authentic interest. I think what's missing most now in every family and business is trust. And this country doesn't even know who to trust anymore. So if all I help in any way with the permanency of the dirt or showing up every day for a family and a business is, you can trust me. Like, if you know me for an hour, or if you know me for 30 years, if that's all anybody says about me, I'm winning this game. That's all I care about. You can trust me.
The dirt holds the roots, Dirt holds the roots, man. Your dad, you told the story about your dad, how he didn't teach you how to invest, but he taught you that you could. And this recurrent theme in your whole experience of people not saying how, but letting you observe. Smith Barney in the Hail Mary letter and saying, you're not taking applicants, you're not going to take my resume, but I just want to visit. I just want to observe. I see a direct connection to all of that with visiting with your grandparents and watching them, telling your family every day, we will attack with relentless enthusiasm, unknown to mankind, but attack not in a, again, like attack the dirt, like the roots are here, we're gonna grow. And it's not how, it's watching. It's, I don't know if it's still right there in front of you, but that lucky charm, your grandpa's wire, like it's this over and over again. We're gonna attack with enthusiasm, the self-belief that we can accomplish this thing that somebody else thinks is impossible, but it's self-trust, it's owning the good and the bad. And it's self-trust in saying that, like, we're going to make this happen. The beautiful seed of choosing your path in your training program, choosing to go down the PM route, knowing that, I love the way you said this. This goes back to it too. You wanted the full ownership of both the credit and the blame. And man, that's, again, it's like being a blind guy with the ear thing, so he can do that thing. I want the credit and the blame for this. I don't want you to take care of it, because, another quote from you, the unfair advantage of discomfort. And what is that besides being the kid in the back of the baseball store and building those rosters, building the roster in the portfolio, building the roster of the people around you, building so that when you know what you want to be able to tell clients to build wealth is, all I'm going to do is say where 100% of my own money is, and that you're going to sign each letter with your partner. Back to that idea. You want to own all the aspects of this. You want to plant those roots with them. I love that when they said no to those things, you said, my roots, my reputation is more important than your business plan, than your compliance department, than whatever this is. I love that that was your trigger. The ethical stance on your part, on who you are, every fiber of your being, to step back from that. The shingle, the Krueger and Catalano. Did I get it right?
Yes.
The name on the shingle means something, and the best day of your life. And but the better best day is the day your name comes off the shingle, because that's the day that you're building something that's bigger than you, that can exist past you. And it's not just to build another, I'm not picking on Smith Barney in this one, but it's like building that thing that can be bigger than you, but that still upholds the ethics, the roots that you planted in the dirt that you own to grow this. Because as you said it too, all the who's and the what's take a back seat to who you're with. I made a note to myself, another book reference for you, 1984. This isn't freedom. Like, freedom isn't slavery. Get that double speak out. Freedom doesn't require, freedom does require the bonds of relationships, because freedom is trust, freedom is friends, freedom is family, freedom is partnerships, and freedom is free cash flow too, but it's really about time. Your explanation of the Grindex, the peace of mind of building the memory bank that keeps going. And it's not what's caught, it's what's taught, and what's retained and what's in you, because it's that circle of people. That's your legacy in the world. What you're doing with Freedom Day and all this stuff is to keep it growing. And I have to close this with you, Ryan. I got to issue a complaint. I have a note from you. It doesn't say partner on it. It says buddy. Is this where it falls apart? Did we get to the end and I'm not your partner?
You've got your own investment plan that's already working just fine.
Ryan Krueger, you are truly an intentional investor. I want to thank you so much for your time and your stories today. This has been a remarkable conversation. I'm so grateful we got to have this and record it.
It was a gift and my honor, and I am very lucky to know you.
Thank you, Ryan.
Thanks for tuning in. Be sure to like, share, and subscribe wherever you're watching The Intentional Investor so more people can find our show. You can follow Matt directly at cultishcreative.com or at cultishcreative on Twitter. For more great content at the intersection of investing and life, check out epsilontheory.com or at epsilontheory on Twitter.